In this special episode, we talk to Arlan Suderman, Chief Commodities Economist from the StoneX Group, currently residing in Kansas City, regarding his expectations for the grain markets going forward on a global scale. We discuss production issues regarding the weather in North America as well as in Brazil, as well as demand factors specifically from China and where those markets are headed. We also discuss the USDA's latest reports regarding expected acreages and potential yields, specifically in North and South America. All in this special episode, so make sure to stay tuned. This outlook is made possible by Standard Bank, that plays a crucial role across the full agribusiness value chain, from what happens on the farm and beyond the farm gate, right up to when the farm's product reaches the retailer shelves. Because of this, they understand the full agriculture ecosystem and the trends and risks across the sector. And they're able to give guidance on the right finance, insurance, and working capital solutions at every stage. Standard Bank, it can be.
Was the Hilux born a legend? No, it was made one by you.
As promised, we're here with Arlan Suderman today. He's the Chief Economist at the StoneX Group and also affiliated with the Kansas State University, of course. And he's taking some time out of his busy day, of course, to share some thoughts regarding the grain markets on an international scale and where he might think these trends are headed. Thank you very much, Arlan. I really appreciate your time and welcome to the AMT discussion.
It's my pleasure to be here today.
Arlan, I think, as mentioned earlier, we think of the grain market in three main categories at the moment. I think weather plays a crucial role at the moment, and of course, I think expectations, the USDA reports that came out regarding stock-to-use ratios, and of course, the acreages that have been planted, the potential yields, and so forth. And of course, I think the uncertainty in these COVID-ridden times is, of course, the demand factor, especially from China, how much they would buy in, and all those factors playing a crucial role in, I think, a very volatile grain market at the moment. But let's start at the beginning. I think let's start with the weather factor. How is it currently looking in the US in terms of your planting progress, the weather-related factors, and all those factors going forward into your planting season?
Yes, it's really been a pretty good planting season overall. We've been quite dry in the northwestern part of the Midwest, and we've seen some areas of dryness in the eastern Midwest as well, but we're now seeing rain spread up into many of those dry areas. It's not going to replenish the dry soils. It's still going to leave us vulnerable, but it certainly should be enough rain to get the crop off to a good start. And then as that rain kind of moves to the east, I think overall our initial crop ratings are going to be pretty good. As I said, we're still going to be vulnerable this summer if we don't see a continuation of rains, and that is the concern of some forecasters going forward. There's a disagreement among climatologists about what type of a summer we're going to have, and that largely hinges on a disagreement on what sea surface temperature anomalies are going to do in the Pacific, which really impacts our weather in years when we're in a relatively neutral ENSO cycle between La Niñas and El Niños. And so overall, pretty good. We did have some very dry areas of the Western Plains hard red winter wheat belt, as well as the Northern Plains spring wheat belt, reaching up into Canadian prairies. We've been receiving some good soaking rains in the Western Plains, and those rains are moving up toward the Northern Plains and the Southern Canadian prairies as well. So that picture is looking dramatically better now than it did a couple of weeks ago.
That's really good news, I think, for your local producers. If you I know there's drier weather that was specifically reported in Brazil. Did that have an impact on the ratios or the stock ratios going forward?
Absolutely. And we have a team on the ground in Brazil, and once a month they estimate or they survey their customers as to what they think the final crop production is going to be. And right now, of course, we're in the second crop, which is the largest crop in Brazil, or sometimes called the safrinha crop. And it is getting smaller. It's encountered considerable stress. The northern 40%, primarily in Mato Grosso, had good rains up until we started to reach the pollination for this late planted crop. Had the crop been planted on time, we've probably been looking at a pretty good crop there, but it was planted late due to the late harvest of the soybean crop. The southern 60% has been very dry. They are seeing some showers over the past week. They did see some showers in some southern areas of the belt. Some more showers are expected to scatter over the belt here over the coming week before things go dry again. Our people on the ground there, when I talked to them yesterday, were indicating that this is simply putting a pause on the deterioration of the crop. They lack confidence that it's really going to improve the crop from where it currently is. They currently estimate the total corn production in Brazil at 100.25 million metric tons. That's below USDA at 102 million metric tons. And their expectation is that it's going to get smaller when they do their June 1 survey here in a few days. So that crop is getting smaller, and that tends to increase demand for U.S. exports about 6 months from now, as their supplies in Brazil run out and their normal customers come then looking to us for corn.
Yes, and I think, of course, the USDA reports that came out regarding the expectations of the acreages and the potential yields also played a big role in the volatility of the markets internationally on a global basis. What's your expectations? Is the stats that the USDA gave correct, or do you think it can be adjusted upwards or downwards?
I think USDA was very reasonable in its estimates. Its old crop stocks for the current marketing year that ends on August 31 are a little tighter than mine, because I think we have been feeding more wheat in the feed bunk, displacing some corn that they haven't accounted for yet, and probably won't until after their June 30th and their September 30th stocks reports. And so my old crop stocks are a little bit higher, and that means my new crop stocks are a little bit higher as well, because that carries over then as we do more wheat feeding in the next year as well than as what USDA is currently forecasting. But overall, my export expectations are pretty close to them, maybe a little bit less in the new crop, but that's still a big unknown, really. China has been actively buying new crop corn. We expect them to roll a little bit more of their old crop into new crop, not because we can't deliver the corn, but because of their infrastructure on their end, just getting enough ships available to turn enough cycles before the end of the marketing year. So we think some of that demand is going to shift to new crop. USDA is very aggressive in its Chinese import target for this year and next year at 26 million metric tons for both years. I'm currently at 22 million metric tons for the current year, 24 million metric tons for the next year. But I do expect them to get more of next year's corn from Ukraine, which has been their typical supplier of corn. They're currently in a buying spree, and we anticipate before this current buying campaign is over, they will have purchased about 15 million metric tons for delivery next, really ahead of their 2022 Lunar New Year holiday, which typically comes like in early February. So they want to get the shipment before then. And we see that primarily as a hedge against world stocks being tight because of the short Brazil crop and some concerns about how the U.S. growing season may play out.
Yes, and I think that's probably why this market is so volatile, going up one week and then dropping the next week, and there's a lot of uncertainty in this market, how demand will play out, how the supplies, of course, will play out. Arlan, in over the medium term for the rest of this year, what is your expectations going forward?
Well, I think there's a three-legged stool is what we would say these markets are sitting on. One is the strong demand led by China, but also non-China demand is strong as well. The second is the weather problems that we've talked about, creating some supply risk. The third is the tremendous amount of money in the markets because of fiscal and monetary stimulus, not only in the United States, but in many countries around the world. That's pumped a lot of money into the economies, and much of that money is making it in markets. And put together with that, we have expanded position limits at the Chicago Board of Trade. As of March 15th, 60 to 80% higher position limits. So we've been expecting big swings in the markets. We've been expecting the market to rally earlier than normal based on the risk that we've talked about, and then to have big price swings in both directions. And we think that volatility is probably going to be with us for the next several months. If the United States has a good crop, then we could see the prices start to calm down as we go into the last part of this year. If the U.S. has a short crop along with Brazil's short crop in corn, then we could see even significantly higher price levels than what we've already seen.
Arlan, very interesting. Thank you very much. Looking over the medium to long term, what do you usually see if you do some statistical analysis about a high commodity price cycle? What do we see usually after this? Is there some demand destruction and the markets that can calm down significantly after this? And we know input costs increase significantly. Can there probably be some pressure on the profitability of our producers as well?
Well, we've been in a cycle really for the last 4 or 5 years when demand has exceeded supply, and so we've been working supplies lower. And so the purpose of the job of the market is to bring supply and demand into balance. And with all the money that's been put into the economies of the world through central bank action and fiscal stimulus, we don't see demand backing off, so that means the supply needs to increase. So the market is going to be buying a lot more production out of areas of Brazil where they can continue to expand. They've got a lot of brushland not touching the forest where they can expand production. We expect more Black Sea region production, and to bring that production up to meet that demand. And that'll probably take several years for that to happen.
Yes. Yeah, and I think one trend that I basically saw from this COVID situation was that there was a significant shift in demand towards food products, towards more staple foods, necessary products, of course, and that really created additional demand for foods, grains, livestock prices, and so forth. So that was a really interesting trend that came out of it, or it amplified this whole process, of course.
Mm-hmm. Very much so. In countries coming out of the pandemic, recognize the need to have larger reserves of food grains and meats in reserve, and they're not as comfortable with just-in-time supplies, and so they're restocking some of those supplies now during this current correction as well.
Arlan, I really want to thank you for taking time out to discuss some trends and relevant topics today with us. And it was really insightful, and hope to talk to you again very soon. I think in these volatile markets, you'll never be sure. You can never be too sure of where these prices are headed. But again, thank you very much. I really appreciate it.
Thank you, Johnny.